Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today, our guest is Mark Hentenmann. Thanks for being on the show, Mark.
Hey, thanks for having me.
Now, I'm honored to have you on the show. And a little about Mark. He's an Emmy-nominated writer and producer who's written for David Letterman and The Family Guy and created shows for Fox and MTV. Also maintains an avid real estate side hustle, having bought a duplex with his first script payments as a hedge against the uncertainty of the entertainment career. He's since built a $70 million multifamily portfolio and a company, Quantum Capital, which manages and syndicates multifamily investments. His mission is to help others achieve financial stability and freedom through real estate investing so they don't have to become television writers. So, just the conversation I've had with Mark before we start interviewing has been great. Learning a little more about his business and what he's up to. And I'm looking forward to you sharing that with the listeners as well, Mark. And thank you again for your time and tell the listeners, who you are and elaborate a little bit about on, how you got where you're at and we'll dive in.
Sure. I'm originally from Ohio, just outside of Cleveland. I never started out with the intent of being a real estate investor. I wanted to be a writer. And I didn't know if that was a possible career. I had never known anybody in the entertainment business or anyone at least who had succeeded out there, but I thought I'd give it a shot. I began pursuing that. I started out as a greeting card writer and illustrator in the alternative humor department at American Greetings. And then my cards got me hired to write for David Letterman, and then moved out to LA. Kind of realized I was in New York and realized that most of the business was in LA. So moved out here and joined a new show called Family Guy back in 2000 or 99 was when Family Guy started. And I was convinced that I was going to be unemployed, all throughout the early stages of my career. I was convinced that in 6 months I was going to be unemployed and never work again. And what happened is I was in an apartment, my 1-bedroom apartment with my girlfriend at the time and my wife now, and they raised the rent. The landlord raised the rent, and we were looking at our apartments. And we visited an apartment, walked out, and saw an open house across the street. And it was a Saturday afternoon, so we wandered in and talked to the broker. And her name was Junon, and we said, we're not really buyers. We just visited the apartment across the street. And she's like, well, what's your financial situation? I had just gotten my first script payments at Family Guy. I had been in debt and broke for what seemed like an eternity my whole life, but I had about $45,000 saved up at this point with my first couple script payments. And she's like, you should put that toward a mortgage. And I was like, I don't want a mortgage. Like, I'm going to be unemployed. That's the last thing I want is the burden of a mortgage. But I said, the only thing I would ever consider is it would have to be the best investment I've ever made, because I could sure use some kind of financial cushion or other source of income for when I am unemployed, which I was always sure I was going to be. And we parted ways. She called me a couple weeks later. She said, I found the property you need to buy. There's a catch. You need to become a landlord. She showed me a kind of a duplex in a great up and coming area. It was marginal at the time, but you could tell it was coming up fast and it needed some work. And I said, I looked at it, I could see the potential and said, sure. And got into a bidding war, got this duplex, and tried to embrace being a landlord in this real estate purchase I had just made, which I was 100% convinced it was a huge mistake and was going to be a disaster for me. But wrote it out, hooked immediately on real estate. I really love turning property into something that was really nice and cool, and the economics of it worked. I had my next door neighbor from Virginia as well, Mike Henry, who is a voice actor, Family Guy. He does the voice of Herbert Consuela in Cleveland. If anyone watches the show, he was my tenant next door, so it was kind of an easy first landlord experience. Although somewhat easy. I don't know. Maybe he's a good tenant to learn how to be a landlord with. In 2000, sold in 2005, and had a pretty remarkable return, about 2%. I bought it for $435,000, which I was convinced had overpaid, but I sold it for 1.27, and I was, by that time, I was completely hooked. Real estate, I had discovered this thing that I wanted to do for the rest of my life. This was my investment vehicle. It was going to give me security in the entertainment business. And yeah, I was no longer ever going to put money towards just a financial manager who would get me 4 to 5%. I was going to actively invest. And I did so throughout the early 2000s and started to build my portfolio.
Nice. So, it was neat that you said you were writing greeting cards, and that's what got you hired with David Letterman, and then, but then you moved from there to, another show. And then all of a sudden, I hear it all the time, accidentally kind of got into real estate. You met somebody that said, hey, you need this property, and somehow it happened. And now all of a sudden you start seeing some benefits of owning real estate. And it's like, okay, wow, this is something I really need to learn more about. But now you've gone from duplex to, it's a $70 million, multifamily portfolio. And so you've done something, you've made a few moves since that duplex, that's for sure. What was key in getting you from the duplex to where you're at now?
I think I tried to buy a building or two a year once I kind of had wrapped my head around that real estate was so great. Honestly, when I bought that duplex, year one of owning it, I was convinced I had just made the biggest mistake of my life, and then that this was going to result in my financial ruin. Year two, I think my first tenant had moved out, and I had increased the rents, and suddenly it was covering half my mortgage. Year three, I refinanced, and suddenly they were paying all of my mortgage. And year three, I was convinced that this was the greatest thing in the world. So I went full across the spectrum from disaster to like, oh my God, I have to do this all the time. And I was committed to it. So the moves I made, I started buying a couple buildings a year. I would pump any income I had. A nice virtuous cycle of this is when you have this vehicle that you're committed to. I never wanted to buy a nice car. I never wanted to spend any money anywhere else. I wanted to put it all into real estate investments. And I was doing that. And I became known as, amongst my writing peers and in entertainment peers, as someone who was doing a pretty aggressive real estate side hustle and was the guy obsessed with real estate. And so a lot of them would say like, hey, could we invest with you if you find something? And that's kind of how I got into partnerships and syndications. And I do those sort of sparingly. I do a lot of my own investing, but when I find a deal that pencils out as a syndication, I sort of have a group of people I could go to and go into bigger properties that way.
Nice. So really you started becoming known as the real estate guy amongst your peers, your network, and then they're looking to you for that guidance or how to invest in real estate.
Exactly. Yeah.
So tell us about some of the opportunities you're working on now, and what's your focus now? From the duplex to doing 1 or 2 deals a year. Are you mostly multifamily? Are you retail? What's your focus?
I am exclusively retail, and I've grown. I think I have about 300 units and about to add maybe 75 more. And I've branched out from LA. I was in LA for 8 years. altogether, I was in LA exclusively for about 17 years investing. And I think it's a great market. It's not a market I selected. It was a market that kind of selected me. It was just a pool that I learned to swim in. And because of my financial situation, I wasn't a millionaire, or I didn't, people think LA is such an expensive market. I just took whatever I had and bought the cheapest buildings I could find in the best locations. And it turned out to be a pretty good strategy, because I sort of zeroed in on these metrics of trying to target about $250 a square foot, which may sound high, but it's actually very cheap for LA given the cost of the land. And I would shoot for about $250 a square foot and a 5 cap. And those are challenging metrics to hit, but when you hit them, the average cost to build new construction in LA is about $500 a square foot. And the average cap rate in LA is maybe in the mid threes. So I find these old buildings that need work, and I buy them for about half the replacement cost. And I always make sure they're in the core area of the city, which means like not out on the outskirts. I'm in central LA, right next to downtown, right next to the employment hubs. And, I focus there because I live not too far from there, but also, I've been through the 2008 crash, and I know that there's going to be a big cushion when you can buy it that far below market. And you're in that tier of workforce housing that I was in the 2008 recession with those properties, several of them, and they were very resilient. They maintained the rent levels, and we rode it out and did very well through the 2008. And I kind of came away. It was a scary time, no question about it. But in retrospect, I thought this is a strategy that I need to stick with, because I don't need the anxiety of hanging out there with high risk properties.
Nice. So, but now, we talked about, you've been in LA for 20 years. You've been buying those properties, in the core part of the city, downtown, and I appreciate you elaborating on why that was important and how that's proved to have been valuable, through the recession and over the years. But now you're diversifying, right? Tell us about how you're doing that and why.
Sure. Maybe about 4 or 5 years ago, I think, like I mentioned, I had about 21 or 22 multifamily properties in LA. And I had started to think I should really pick a second market, because and a part of it is the tech boom, the tech revolution that we've experienced has made data so much more available than it was back in 2000 when I started. Nothing was digital, and it was such an real estate was such an opaque and scary investment vehicle that scared a lot of people away. But technology has made it much more transparent and provided so much more information on properties and locations. And so I thought, all this information is now available. I would like to diversify into a second market and get to know a second market well, and also invest in LA. And I zeroed in on Austin, Texas, and I've now bought a couple buildings, and I'm in escrow on a third one, and I'm going to have about maybe 200 units there in a couple months total.
Okay, those are multifamily?
Yes, those are multifamily properties.
Okay, but your focus is on retail now, is that right?
No, not retail, multifamily.
Oh, okay. I was confused. So awesome. So, okay. So you're strictly focused on multifamily still. And so are you looking to continue to grow in that second market? You're looking for a third market, or are you staying right where you're at?
I think I'll stay in Los Angeles and Austin for now, and get to know them. I'd rather become an expert. Mm-hmm. I went through the evolution of Austin and I remember talking to a partner of mine who's helping me there. And I was saying, like, at the early stages in Austin, I'm like, man, I'm nervous because in Los Angeles, I reject 150 properties, if not more than not, if not way more than that before I actually buy one in LA. And I'm in Austin and now I'm buying like 1 out of 20 or 25. I feel like I need, like, I feel like I'm not getting the absolute best properties there. And,
Wow.
and I need to go deeper, dig deeper and get more information. But it's taken some time and I want to be, and I've gotten to know the lay of the land very well and found some great properties there. And so, yeah, I think for those two markets.
Yeah. How did you pick Austin? You know, out of all the other markets that you could have picked, why Austin?
I, started with research, and Austin has one of the highest, greatest population growth of, specifically it was millennials like a couple years ago. And it's becoming a very big tech city. Oracle is there, Apple is there, Microsoft is there. Apple is building a huge campus. The job, it's like top 5 in terms of all the key demographics, or key metrics that I look for. And that's population growth, rent growth, wage growth, job growth. And it's also, what I like about it, specifically as a Texas market, is Texas is very business friendly. And it's one of what is perceived as a negative about LA, but actually when you're on the ground as a real estate investor, it kind of helps you. It helps you a lot, is the regulations and the barriers to entry that are in a city like LA. I think LA was the 2 most difficult places to build in the United States are, I think, Honolulu, Hawaii, and Los Angeles. And as a result, we have a chronic lack of supply in LA. So if you're a real estate investor, you don't experience the threat of oversupply, which is often what kills boom markets. And Austin is similar. In Texas, Austin has the most regulation, and it's the most difficult place to build. So it makes me a little less worried about rents softening and values softening because there's just too many properties out there.
Oversupply. Yeah.
Yeah.
Yeah. So, you mentioned a minute ago about digging deeper, into Austin so you can find the better deals, and how, I appreciate you mentioning too, in LA, you're making offers on 1 to 2 properties out of every 150 to 200 you look at. Well, but in Austin, I think you said like 1 out of 25 to 50, something like that. So, and you mentioned maybe digging deeper to find those better deals. And how are you doing that? And what does that look like?
How am I betting deals in Austin?
Yeah, how are you digging deeper to find the deals? To find the deals you're talking about?
Well, I think it starts. Texas is a non-disclosure state, as you probably know. So there's a lot of properties that trade. There's differences between the market I've experienced in LA and Texas, and what I find is a lot of properties trade off market. And it's hard to get sales prices. There's often not a lot of sales prices, and it might be related to the taxes, property taxes. But I find deals. I have a partner in Austin, and he's on the ground, and he knows the area very well. We both have built a strong network of brokers, of lenders, of property managers there. And I think as the way we get more deals is by increasing our network there. And, I've gotten to the point where I'm now getting, that flood of emails that come in on a daily basis of, new properties that are off market or coming to market. And we're just sort of sharpening our acquisition tools.
Yeah. So you focused a lot on those broker relationships in that market, you and your partner, it sounds like.
Yes.
Yeah. So very important, right? I mean, those relationships are key. So any other ways that maybe, you've connected to find more off market properties in that market, especially being from a distance, are you going there often? How are you doing that to try to find more off market deals?
And to back up to one of the reasons that I picked Austin is it is a very easy flight from LA You could get there in 2 hours, and I've been there a lot. It's something I can go back and forth in the same day. Usually I'll stay overnight, but yeah, it's just building relationships. Our property management company has become surprisingly helpful in that they're all around, all throughout Texas. They're in Austin, Houston, San Antonio, Dallas, and they have a wealth of information on properties, property owners, and we've started reaching out directly to owners to find, distressed properties. So that's another tool that we've added to help find those properties. And talking within this large property management company, also finding owners who are getting ready to sell and making preemptive offers.
Nice. Yeah. Great advice there too. Yeah. I mean, being proactive, right? Finding these sellers, building those relationships as well, ahead of time. And so, Mark, your bio mentions that your mission is helping others achieve financial stability in real estate. How are you doing that? What does that look like?
I think when I got started in real estate and had been doing it for maybe half a dozen years, I had become an evangelist for real estate investing to all of my peers. A lot of them, were not very financially focused. They're entertainment, creative people. And I was telling them, like, do yourself a favor. You see so many people making poor financial decisions in Los Angeles and in the entertainment business because just nobody seems to be focused on that. And I was sort of beating that drum with them, is like, you gotta prepare, give yourself a good financial future. Don't be reckless, make smart investments. Don't necessarily trust the financial advisors that are currently handling your money. You got to be proactive. But what the reality is not really anyone was willing to embrace that and jump into real estate hands-on the way I did. Yeah, I'm sorry.
But you're helping others. How are you helping others achieve that?
Yeah. So I right now I try to help them do that. A lot of these people who invest with me are my friends, and I want to see them succeed. I want them to build themselves a financial cushion that they can have in a business that we're all in.
Nice. So if you could, if you could go back to that duplex and knowing what you know now, what would you tell yourself to do differently?
The ironic thing is, I look back on that first purchase with that duplex and realize I would never do any of the things I did related to that. I would never have bought it now. Like, I got into a bidding war on that property with 15 other buyers. My initial offer was, I think, $360,000. It was listed at $379,000. No, I think I offered $350,000, and it was listed at $379,000, and I bought it for $435,000 after 2 weeks of an intense bidding war with 15 other buyers. I would never do that nowadays. I look back and that seems insane. I would walk away if there's more than 3 other buyers floating around.
Would you say go right into the commercial business, commercial real estate and syndicating, or would you say start with that duplex or some type of duplex, but maybe buy it differently?
I think the duplex is a great place to start. If I were to make a recommendation to anybody, I would say the best economic opportunity there is, not only in real estate, but possibly anywhere, is taking advantage of that FHA loan that you could use for your first property. You could put about 3 to 4% down. I was not aware of this at the time, so I missed the boat on that one. But I put down 10% on my first duplex. If I could have leveraged that with 3 or 4%, I already made 2,000%. I probably would have made 8,000% return, which is insane. But the caveat is you just have to make sure that you can add value. You don't want to go backwards. You don't want to have the property go down in value. But if you could add value and leverage it at 4%, which is a 25 multiple, I think there's no better way to get started. And it doesn't hurt to learn how to invest in real estate on your own before bringing in a whole bunch of other people.
Sure. And so, Mark, when you talk to, let's say, a new broker now, and they say, "Yeah, Mark, what's your buying criteria?" What's your response to that? What are you looking for?
I would say, don't bring me in a city like LA. I would say I don't want to see 3 caps or 2 caps, or even low 4 caps. I want to see above a 4.8 cap, ideally a cap rate in the low 5s. I know that, again, that doesn't sound great in a lot of markets, but in LA, that's a really good deal. And what that allows for 75% leverage. And that's kind of where I want to be. I think leverage is important. In retrospect, looking back at all of my investments and the ones that performed the best, the 2 components that they all have consistently is good leverage at about a 75% LTV. I don't want to go higher than that. I just don't want the risk of that. But and then the second component is value add. So my criteria are buying a 5 cap or better at below $200 or below $300 a square foot, ideally around $250, with a value add component in a core market, a core area of Los Angeles, I would say. And that for me is Koreatown, downtown, Hollywood. I was an early adapter to Hollywood. I got out here never having really been to LA before I moved here in my 20s. And I was driving around Hollywood, and it was kind of a dump. It was, it was like it was sketchy, drug dealers, prostitution there. And I was baffled. I was like, oh my God, like Hollywood is a brand that there's no one on planet Earth that doesn't know Hollywood. And how is that not like the gem of Los Angeles? And it wasn't. It was just in neglect. And I was like, there's no way this is going to remain that way. And so I started buying some of my cheap properties in Hollywood to start with, and then moved into Koreatown and into downtown and in those parts.
Wow. So what's been the hardest part of this syndication journey for you?
The hardest part for me is I enjoyed syndication. It's fun to do it with a group of people. The hardest part for me is time management. I am writing movies. I'm writing pilots for TV, and I'm on the show Family Guy. But I also take on a large volume of real estate projects. Real estate is just something that I plan to do until I'm 100. I don't know when I'm going to get spit out of the entertainment business, but I'm committed to doing real estate for the rest of my life. And so it's a very important part of my life and something I'm committed to. So I just, in the syndication space, I think it's finding a great deal that you're not cheating, you're not doing it, for fees, that you've vetted, hundreds of properties and found a unique opportunity, and that you could deliver, exceptional results to your buyers. And then it's just time. It's my time. I have an asset manager, but I think I need to build out my team a little bit more.
Yeah. And what's a way that you have recently improved your business that we could apply to ours?
I'm sorry, you broke up for a second.
What's a way that you've recently improved your business that we could apply to ours?
I think, technology is an ongoing way that I improve my business. I'm using more online. I shifted from QuickBooks to Google Drive, which seems like a small thing, but QuickBooks has been the standard for bookkeeping and accounting. And I think now bringing it onto Google Drive, which allows me to share it with my CPAs, with my partners, And, as we do, for example, value add projects, we can, it's much easier to track. So that's an improvement. And
So
systematize.
is that by like using a Google Sheet, as opposed to QuickBooks, or to do bookkeeping, or what?
Yes. Using Excel, but they translate to Google Sheets on Google. But I think it's the sharing aspect of it. And I found with QuickBooks was a little too elaborate for me. It was a little too complex, and I wanted some simplification of it because I had to do it across dozens of buildings. And so, I needed something a little simpler. And so I handcrafted my own spreadsheet with my CPA, and now it's great. It's easy. And that's part of, I think, the thing that improves my or anyone's syndication business is automate wherever you can, systematize wherever you can, and leverage the help of other people.
What's a recent system that you've put in place that's really helped you?
I think I'm always trying to find activities that I do and find out if there's a system to them. I think, I this recent overhaul I did with my accounting and bookkeeping is a recent system that has saved me, hundreds of hours a year by adapting to a new format for that. And then, I think as I've ventured into the Austin market, I think having a partner on the ground there has been a great resource. It's not exactly a system, but it's leveraging the help of others, and we break up what we need to do. And, it's been a great working relationship.
And what's your best advice for caring for investors?
Best advice for caring for investors. I would think, make sure you never forget you're serving them. You're not serving yourself. We're at a point where the market is flooded with syndicators, and I think, just be careful. If you're on the investing side of a syndication, make sure you vetted the syndicator. And I think if you're a syndicator, make sure you're in this for the right reasons. I mean, sure, you could make a lot of quick money if you just go out and grab investors and plug their funds into investment. But if you don't know what you're doing, you're going to lose money for them and yourself, and your syndication career is going to be short-lived.
And what's the number one thing that's contributed to your success?
The number one thing, I think, passion. I think passion. I am obsessed with real estate. I love it. And then I think maybe a trait that I have is I've always been kind of calm demeanor, and I can plod along endlessly. That's how I got into the entertainment business. I could take a lot of punches and keep moving forward until you eventually get to where you want to be. And real estate is that way too. It's fun, it's exciting, but in order to succeed in it long term, you got to take some punches. We're all going to go through a recession sometime in the near future, and it's not always going to be rosy and stellar returns, and you got to be ready to weather the downturns as well as the boom markets.
That's almost the definition of being an entrepreneur, isn't it? Being able to take the punches and keep moving forward.
Right, exactly.
So, Mark, we're about out of time, but how do you like to give back?
How do I like to give back? I like to contribute to charities. I am in a bunch of environmental charities, but also, I contribute to homelessness, and because I'm in the real estate space, I want to give back in that arena, but also to investors and anyone who's, coming of age in today's environment, in today's market. I have a lot of fun teaching people how to use real estate as a way to build their financial future. And, that's fun for me.
Awesome. Well, Mark, you've been a great guest, and I've really appreciated hearing your story, going from writing greeting cards to being a successful deal sponsor and doing very well. And I appreciate, you elaborating on so many important points, but tell the listeners how they can get in touch with you and learn more about your business.
Sure. The name of my company is Quantum Capital, and the website is quantumcapitalinc.com. And you could reach out to me directly at mark@quantumcapitalinc.com.
Thank you for listening to the Real Estate Syndication Show, brought to you by Life Bridge Capital. Life Bridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. Life Bridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.